Good morning, everybody. I think we will go ahead and get started.
Katie, are
Thank
you
you
able to
for,
hear me?
oh yes, thank you. Yep, we can hear you good, Justin.
Perfect. I'll
Excellent.
go on mute.
So we actually have both Lynn and Justin joining us virtually. So thank you for um, accommodating this virtual version of the director's cut. You'll see our opening slide. Actually, I'm just going to do a shameless plug for our geological survey, which is under Department of Mineral Resources as well. The paleontology department will be doing a return of the dino mummy this Saturday at the North Dakota Heritage Center. And that starts at 11 and goes until 4, where you'll be able to see Dakota, the dinosaur, in its new home at the Heritage Center and a new display. And so there's several presentations, a showing of the land before time, and also if you go to the Paleontology's Facebook page, you'll see some tickets there that you can actually do some tours of the paleontology labs where you can see them do their work. So I just wanted to make sure and let folks know that that was something to do here in Bismarck this weekend. And with that being said, we'll get to what all these dinosaurs did and made us oil and gas, and I will pass it over to Lynn and with production.
Thank you, Katie. Am I sounding okay?
Yes, yep, you are.
All right. Thanks, everyone, for tuning in to our October Director's Cut. I have not created an avatar, so you'll just have to imagine what I look like. I'm in Williston, and it is snowing here. So welcome to winter in North Dakota. Happy to report that both crude oil and natural gas production seem to have recovered from the July problems with the 5 gas plants in maintenance and expansion mode. Justin will probably talk a little more detail about this, but the Tioga plant expansion went well, and they're now capable of increasing volumes significantly. Part of that, though, is the completion of the WBI line across Lake Sakakawea, which will allow more export from that north of Lake Sakakawea area. So we're still waiting on that, but that's nearing completion as well. Crude oil production and natural gas both up 2.8%. So that is encouraging. Oil production 1% above revenue forecast. So we're in the positives there. We are still in third place and probably losing ground on New Mexico. They're at about 1.22 million barrels a day. We're at 1.107. Good news on the oil price front. Oil prices are very, very strong. And so today's oil price is 54% above revenue forecast. August oil price was down a little bit from July at 62.50, but that still puts it a good 20%, 30% above revenue forecast. So state revenue is doing well. Also good news on the rig count. We are up to 30 and continuing to add rigs gradually as we move through the year. New Mexico is at 86 rigs though. So they, even though a new well in their part of the Permian Basin only yields about half as much increased production as a new well in the Bakken, we're going to have to increase our rig count another 30% in order to equal that out. But we are at 30 and we are on the positive side and growing. Also great news on the inactive well business. We're down 400 inactive wells. The duck wells waiting on completion is very stable, and that is, some concern in that we're only counting 10 frac crews in the field, and but that's pretty much a balance with the 30 drilling rigs that we have. They can drill about 60 wells a month, and the frac crews should be able to complete about 60 wells a month. However, our completion numbers are below forecast. For this period of the biennium, we were looking at 40 completions a month, and we only got 34 in September. We did get 47, so we were above for August and below for September. I should note a couple of things, and one One is that we are kind of expecting some oil price action from OPEC Plus. You know, and I noted that for their October meeting, they stuck with the 400,000 barrel a day increase. But we are anticipating that because our shale developers are planning a surge in capital spending and drilling next year, that OPEC Plus is likely to open the taps the next time they meet and give the world a larger volume out of their roughly 5 million surplus that they have. So I'm really expecting around year end and through the first quarter for some softening of oil prices. They don't want to overheat the system and have the shale drillers come on way too strong. So really anticipating some softening oil prices in the near term, or, you know, over the next 4 to 6 months as we go out there. But North American U.S. inventories are low, well below average, while world inventories are well above average. Good news on the gas capture front. We got back up to 92%, and we, you know, have the one exception, which is the fee area of Fort Berthold, but that has that area of McLean County east of the lake that doesn't have decent gas gathering, and so we're seeing some companies, operators, and flare mitigation companies really start to focus on some of those flaring hot spots, and we think that over the first half of 2022, we'll start to see some strengthening and additional flare mitigation technologies deployed. So all in all, a very positive, good report. One item on the federal front, and that is that the state of North Dakota filed its response brief to the federal reply brief in the BLM leasing lawsuit that was filed Monday. We don't have a date yet for oral arguments or for a court date, but we'll be keeping you posted on that. So with that, I'll try to answer some questions.
Thank you, Lynn. I did get a few questions emailed in to me, so I'll just pose those over to you. At what oil price do you expect Bakken producers to maybe ease up on some of their capital discipline? And what level of production do you expect in the coming months if WTI can stay at around that $80 per barrel?
Yeah, great questions. And so, you know, this $80 per barrel WTI is definitely strong enough to shift capital to the Bakken, especially with the well performance that we're seeing. So, you know, we're at that point. I think the concern on the part of industry, you know, as well as myself, is what is OPEC Plus going to do, and what is COVID-19 going to do here in October, November, December. That this is the decision time for our large operators to set their 2022 budgets, and they're setting you know, strong budgets, but they are cautiously optimistic. So I think we're at that price point where we should see capital shifting to North Dakota and to the Bakken, but they're still going to watch as they run through their budget process in October, November, and December, and keep the option open if oil prices drop significantly, you know, back into the 60s, that they could scale that back a little bit.
Thank you. Can you talk in any more detail about the flare mitigation technologies or specific efforts being deployed, especially if there's any information for the Fort Berthold fee areas?
Yes, so the flare mitigation that we're hearing the most about is gas to grid, and then gas to, I guess you'd say, data centers. Both of those are very scalable, and there are technology providers, service providers that are ready to deploy those technologies in the field, and they're working and talking with some of our operators. So, for example, there's an opportunity in Charleston where there's a significant bottleneck to move some of that flared gas into electric generation and put that on the grid, which is needed in McKenzie County. And then, a similar situation over east of the lake in McLean County, but in that situation, there's not as easy access to the electrical grid, and so the focus is more on generating electricity and then using that electric power for data servers. So those are the two dominant flare mitigation technologies, but we're getting a lot of inquiries, and as you know, the legislature put a tax incentive in place to incentivize operators with an oil extraction tax incentive to utilize those flare mitigation technologies. Might become important here in October, and I meant to mention this, and I hate to keep throwing things to Justin, but he probably needs to talk about what's going on with Northern Border this month, and that's prompting some flaring in that they've got some capacity restrictions as they're doing some maintenance.
Thank you, Lynn. Shifting gears a little bit, in some of the last director's cuts, you'd spoken about operators reusing some of the produced water in their operations. Has there been any progression on that or any updates related to utilizing that produced water in other ways?
Yeah, so I can give an update. Unfortunately, no progress. I had a chance just recently to speak with the service provider that's interested in doing that, and we do have a meeting set up with a second service provider, but they, because of the supply chain problems, they have not been able to get some of the equipment that they need in order to monitor their systems. So we're still on hold in terms of testing those first systems and beginning to deploy that. Of course, now we're reaching winter months, so it'll kind of depend on what nature does and what the temperature does, but hopefully those supply chains will come through, and sometime here in October they will be able to get the electronic equipment that they need for monitoring. We want to be very cautious because of the salinity of our produced water, and make sure that all the monitoring systems are in place to do it safely.
Thank you. So Lynn, you had just touched on this a month ago. We've got a question coming in that curious if you'll expect the climbing cost of natural gas to have any impact on flaring levels.
I do, and so you've all observed how rapidly natural gas prices have been climbing, and so there's absolutely no financial incentive for anyone to flare at this point, and so a couple of things are happening. The traditional gas gathering and processing and exporting companies are able to capitalize their projects more readily. So we're beginning to hear discussions about the next round of expansion projects, and of course the pipeline under Lake Sakakawea to move natural gas from up on WBI's north line across the lake and into Northern Border is nearly complete, and that's going to be easily capitalized at these prices. So it is driving discussions about investment in more gathering and processing infrastructure, and that's very healthy, and it has taken away any incentive for the operators to prefer flaring the gas over gathering it and processing it.
Thank you. Just a quick reminder that if you have any questions for Lynn, to go ahead and put them into the Q&A portion of this virtual meeting. I did get another email that had come in for questions, and this would be related to some of the permitting around injection, so slurry injection wells. Do you think there might be any more potential for additional wells to be permitted in the state related to slurry injection?
Yes, we do. Great question. So the fracture slurry injection looks like it works very well with our North Dakota geology, and so we have permitted the second operation in McKenzie County We actually anticipate that our other 3 core Bakken counties are likely to each get at least one of these wells. So, there are discussions ongoing about placing one in Williams and one in Mount Trail and one down in Dunn County. That would round us out pretty well and put us in a situation where much of our T-norm waste could be dealt with very economically and dealt with here in state in an extremely safe manner. So yeah, there are discussions on expanding the technology out of McKenzie County and into the other 3 core Bakken counties.
And you answered a little bit their other question as a part of that email, which was, is there an update, I guess, on the success of how the current slurry injection well is doing and how that's performing?
Yes. So, just kind of in general, there have been no surprises, and it has operated now through pretty close to 300 cycles without a hitch and without any surprises in terms of the pressure responses or the behavior of the Broom Creek formation. So now the second one is going to be going into the Indian Cara. So there will be perhaps some lessons to learn there, and we'll see how that goes.
Thank you. One last question, I think, and this actually gets back to production. You recently were down at the Petroleum Council's annual meeting and just talking about some of the next steps in North Dakota. Do you have anything to add just on where production is at and kind of what we can anticipate in the next 6 months to a year? Is there a vision for some pre-pandemic level production again, or kind of what does that next short-term and a little bit of a long-term outlook look like?
Sure. So what we are hearing is optimism, but cautious optimism. So we are not hearing people talking about, within the next year or two, getting back above that 1.5 million barrels a day. What we're hearing is, 1 to 3 to 5% growth on an annual basis. A lot of the focus seems to be shifting to trying some new things in enhanced oil recovery, and also 3-mile laterals in the non-core areas to bring those back to life, which is a really positive thing for Mount Trail, Burke, Williams, Divide counties and parts of McKenzie County, maybe even down into central or southern Dunn County, where some of the 2-mile laterals were a bit marginal in their performance, but people are seeing real positive results, and we're seeing a lot of cases for increased density drilling on 1920s instead of 1280s. So big focus on non-core 1920s and enhanced oil recovery concepts.
Excellent. All right. Actually, I did just get one more question that came in. This one's from Adam Willis. So you had talked about concerns around the ConocoPhillips acquisition in the Permian, what it could mean for the near term in the Bakken. Has there been any movement on that front? Do you anticipate those capital shifts could have impacts in the next year, or is that long term?
We are concerned about that and remain concerned. I don't have any new information other than to share that I am planning a visit with their senior management in February. So stay tuned. And if I get that opportunity, I will pass on what I can learn.
All right. Thank you so much, Lynn. And Justin, if you're available, we'll pop over to the Pipeline Authority update.
Correct. Perfect. Thanks, Katie. If you can queue up my slides there, we'll walk through them here. So let me know when you're ready.
Perfect. They are up, and there might be a slight delay for you, but I'll follow along. So
Okay, perfect. So I'll try and let you know where I'm at in my mind. So thanks everyone. Justin Kringstead, Director of the North Dakota Pipeline Authority. Several topics to talk about. Some of them were queued up nicely by Lynn there in the past few minutes, and I'll try and dig into those and provide some color as we move forward. So on slide 2, just a quick update around the region. Still 1 active drilling rig in eastern Montana, 0 active rigs in South Dakota, so no major near-term changes on what we're expecting to see out of those 2 neighboring states and their potential impact on our regional transportation needs. Slide 3, again, as Lynn noted, those month-to-month changes, kind of right in line with expectations for, we knew that July was going to be a bit off because of the gas capture issues and everything else that had fallen in place in July. Going forward, again, September looked like that was going to be another relatively strong month, and then October we'll see. I'll touch here in a moment once we get to the natural gas transmission, some of the challenges that may occur because of some planned maintenance here in the month of October. On slide 4, very slight changes in the percentages of how we were moving North Dakota's oil out of the region. Slide 5 may provide a bit of better color on the topic. So the Brent WTI spread still below that $5 to $7. So we were starting to see maybe a bit of at least a near-term and a structural level on where the crude by rail market share and volumes are out of the state, because we certainly, with Dakota Access expanding in the month of August, and seeing some leveling off on crude by rail, at least in that month, that we're still early in this phase as the dynamics continue to find a new equilibrium. But those volumes that we'll see here in a moment to the east and west coast were fairly steady in the month of August. So on slide 6, estimating right around 160,000 barrels per day of crude by rail out of the region. So again, just up a little bit with the production bump up. And then on slide 7, when we take a look at the destinations, Pad 5, the west coast, and purple continuing to dominate, over 80% of the market leaving North Dakota headed to those refineries up in the Pacific Northwest. And then a very slight uptick in deliveries to the Rockies, and so I'll keep an eye on that. I don't know that is the beginning of any type of trend. I don't see a long-term market, so I think that might be just a kind of a market anomaly. I expect that percentage to go back down. You can see it's been 0 in the past, and I again do not see any type of long-term growth opportunities for crude by rail headed to that direction. So we'll continue to see the west coast and east coast volumes dominate those deliveries out of the region. On slide 8, the pricing very much in line with expectations, at least in the month of July. You can see Pad 1, Pad 5, this has been a real consistent trend for quite some time now, being the 2 highest price markets, followed up by the Pad 3 refining complexes. And then slide 9, one thing that jumps out to me on this is we're continuing to see strong pricing at Clearbrook, Minnesota. You can see that as of the latest spot pricing, Clearbrook was trading for Bakken barrels a premium to WTI of $1.31, and so that is very strong. North Dakota in general has seen very strong pricing here throughout much of 2021. In the month of August, the discount on average at the wellhead in North Dakota was $5.21, and so historically, for those of you that have followed those discussions and those issues, a typical kind of balance point is around, we'll call it that $7 to $8 range of a discount at the wellhead, and now we're only seeing in the month of August a $5.21 discount. And so for any incremental increase in price that the wellhead sees, certainly that amplifies to the royalty owners, the state of North Dakota, the producers. And so very encouraging to see some strong pricing for those North Dakota barrels. On slide 10, taking a look at those movements north and south of the border. Again, real consistent, nothing too out of the ordinary as far as those barrels that are being moved north and south for marketing purposes within the basin, so I won't focus much time on that topic. Slide 11, we did see, again, as Lynn alluded to, an improvement back to that 92% capture. And again, month of August, pretty minimal events when we look at maintenance and plant turnarounds and other disruptions. There's always some limited amount of that occurring, but certainly a much better situation than we saw in the month of July. And then slide 12, that historical long-term look. And so I would expect to see, as we move forward, continued success on this front of producers meeting those regulatory requirements, and then also meeting their own internal company targets for where they want to see gas capture levels in the basin. Slide 13. Another month of good news. The new wells selling gas, new wells producing gas, right hand in hand, and actually a little bit of an advantage on the new wells selling gas versus new gas producing wells. And so that's always good if there was any type of backlog in the system, to see the midstream companies catching up on that backlog. So again, several months now of positive news on the localized front of getting wells connected to gas gathering systems. Slide 14, this is a repeat. I just checked a minute ago as well. The EIA has not come out yet with their October oil price outlook. And so I'm still running on the September outlook, so it'll be curious to see how they shift that when it comes out. It's scheduled to come out sometime today, so we'll keep a close eye on that, and I'll make adjustments as necessary. Then on slide 15, again with no major change in pricing, no major changes in producer strategies that we can see right now. That slide 15, those gas outlooks are very consistent with what you saw at last month's event. Slide 16, when we talk about gas transmission, the one system I'll talk about is Northern Border. You can see on slide 16 on the map, that is the lime green colored system. There are 3 events scheduled here in the month of October. We've just gone through one from October 5th to October 8th. There's another planned maintenance event from October 12th to the 15th, and then another maintenance event from October 19th to October 22nd. And so Northern Border, they're going to be working on their compressor stations in North Dakota at Glen, Ullin, and St. Anthony. And then there's a third compressor in October downstream that the system will not be fully shut in, but it's going to have reduced flows out of North Dakota, averaging right around 300 million cubic feet per day of restrictions during those 3 events. And so when I think about and tried to put pencil to what does that mean to North Dakota, assuming producers are going to stay within the regulatory requirements or internal targets on gas capture, each one of those events would likely have an impact of potentially around 120,000 barrels of oil production impact during those events. And so when you average that out over the month, you're somewhere in the neighborhood of about a 35,000 barrel per day challenge on average for the month of October because of those pipeline maintenance. And so again, they are what they are. Certainly you can't operate a mechanical system without making sure that you can do it safely and reliably. And so these type of things are part of the schedule. If there are operators that can time other events in the basin along with these to try and minimize disruptions, that's always the best case scenario. But that 35,000 barrel per day, impact, potentially if we do see producers having to shut in, you're looking at probably a $7 million impact to the state of North Dakota just from a tax revenue perspective. So these are not insignificant events, and we'll likely, when the October numbers become available, have some additional color on what it truly looked like. Again, if operators are able to co-schedule other maintenance within the basin itself that will assist and reduce that overall impact. But we won't have those details, as I mentioned, until that information is out in the data. Then slide 17, we've seen a bit of a stabilization here as of late on market share, right around 72% of Northern Border's flow is for North Dakota. So those 300 million a day events that I just noted, I'm under the assumption then, or using that assumption, those calculations, that North Dakota is roughly 72% of that impact. And then on slide 18, we did see some increasing BTU numbers on Northern Border. We did see it creep above 1100 for the first time in a while here before popping back down. So certainly Lynn was talking about the natural gas liquids and the natural gas pricing. You know, those liquids are significantly more valuable and oil prices are up. And so it's not surprising to see the system stay relatively lean and keeping those NGLs as in the NGL phase versus putting it in with that natural gas blend. Again, that value is there, and we're seeing the NGL pipes get maximized as much as they can to get value back to the producers in the state. And slide 19, we'll just use that for questions as a reference if necessary. So thanks, Katie, and thanks everyone. I'll be glad to answer any questions that are out there.
Thank you, Justin. I did get one, and I think it's just also your take on the natural gas prices right now and the economics of how that could affect flaring in North Dakota, or impact gas capture percentages. Could that change in the long term? How is that connection made really between some of those natural gas prices and then what gas capture looks like in North Dakota?
Yeah, I think the pricing, so certainly you kind of have two things that are pushing gas capture. Obviously, you have the regulatory side, you've got the company targets, and then price. And so all of those right now are pointing in the right direction. And it's been encouraging to see the interest by the midstream community and the producers, in line to try and tackle this challenge. So as Lynn mentioned, we'll probably start hearing more and more about projects as they become publicly available. But folks know that there's a tremendous amount of gas yet to be produced out of the Bakken, and the midstream infrastructure right now will not be adequate for that long-term need. And so having these higher prices is phenomenal to help push those type of projects and increase the urgency for those.
Thank you, Justin. I think we have a slight delay, so we'll just give it just 30 seconds here or more to kind of let any other questions pop in. But while I have both you and Lynn still on the line, are there any, I guess, closing remarks in regards to this month's production?
Not from me. We'll see if Lynn has any, but otherwise, if anyone who does have any follow-ups, don't hesitate to reach out to Katie or myself.
Perfect.
Nothing else here, Katie. Thank you very much.
All right. Yep, we will follow up if there's any other questions that come in. Thank you guys so much for participating today virtually. We appreciate it, and we will see you next month.